Good afternoon. Welcome to the latest edition of MEED Live. This is our third webinar on the impact of the coronavirus COVID-19 pandemic on business in the Middle East and North Africa. Thank you all very much for joining us again this week. Hopefully you find these webinars useful, and I do invite you to submit comments or questions as we go through the process. They help us shape the content, which means we can try and help you as much as possible. If we could move to the next slide, please, Nabil. So these webinars are brought to you by MEED, which we have been providing business information about the Middle East since 1957. Our two channels for information are MEED.com, which you can see on your screen on the left, and MEED Projects, which is the region's leading project database and project tracker. And Ed, the MEED journalists are with you today, and Ed James, the Director of Content and Analysis from MEED Projects, is also with us today. Next slide, please, Nabil. So the agenda for today, we're going to follow the similar format to the previous two sessions. We'll have a quick review of the state of play with COVID-19 in the MENA region. We will then have a look at the oil markets. Obviously, a lot of talk about new production agreements between OPEC, non-OPEC, US and Russian producers, and Saudi is leading an initiative to bring G20 oil ministers together. We will then move on to a quick update or overview of some of the latest trends in the project sector from Ed. Then we will run through some of the main developments in the past week in business across the Middle East. And we will then move to a focus on the Saudi market, which Callin Foreman, MEED's deputy editor, will lead. And we shall have time, hopefully, for some questions and answers towards the end of the broadcast. Next slide, please. So joining us today, you can see we have six panelists. I won't waste time reading the names. I've mentioned a few of them already, but hopefully we cover with those six people most of the areas of interest for people attending today's webinar. You can submit questions to any of the panelists using the button at the bottom of your screen that says Q&A on it, and you can submit questions which I will receive and the team will receive live, and we will try and answer your questions where possible through the broadcast. Just one final bit of sort of information about MEED before we get into today's content. So MEED and MEED Projects are providing a lot of live coverage of the pandemic in the Middle East, and you can see these three channels on your screen in front of you. On the left-hand side, we have daily updates, which Neha Bhatia, MEED's construction editor, provides, and that gives you a summary of all the latest government initiatives and health crisis data. Ed James is producing in the middle of this screen a bi-weekly executive briefing about COVID-19 in the Middle East, and actually it has a lot of data about global impact on different industries as well, and so that can be found on MEED.com and on MEED Projects. And on the right-hand side, there is the screen grab of MEED's coronavirus channel on MEED.com, which is sort of a live feed of news and analysis and commentary from the MEED team. Next slide, please, Nabil. Okay, so just a quick overview of some of the numbers. This slide shows you the latest numbers, or at least the numbers up till the end of play yesterday, for the number of cases, confirmed cases, deaths and recoveries across the Middle East and North Africa. In total, there are about 75,000, just over, confirmed cases of coronavirus in the Middle East and North Africa. That is a significant jump, 54% increase in the number of cases just 1 week ago. And sadly, 4,250 people have died with COVID-19 infections, not necessarily because of the infection, but with it. And that also is a significant jump. It's nearly 44% increase week on week. And I think the story of this data over the past week is the significant jump in the number of cases and the number of fatalities connected with coronavirus over the past week. We also have to take a fairly large health warning with the data when we're looking at the numbers here as well, because not every country is recording or testing data in the same way. It's highly likely these numbers are underreporting the true scale of the outbreak in this region. But certainly, and you can see from the graph on the right, we've joined that exponential curve in cases and fatalities that we've been seeing in Europe and in China and now in America as well. Iran is the worst affected market, which has been the case from the very beginning. Saudi Arabia, perhaps not surprisingly because of the size of its population, has the second highest number of cases and a big jump in the number of fatalities in Saudi over the past week as well. I think countries like Egypt, where you have very large populations, I suspect are under recording these numbers at the moment. Just they're not set up in the way that somewhere like Saudi is to track the outbreak. Next slide, please, Nabil. So we've seen another week of announcements. Excuse me whilst I just clear my screen. Another week of announcements of government measures, either social distancing measures or economic and financial measures to, first, to stop the spread of the disease, and secondly, to support the economy and support companies through the crisis. And so the UAE has revealed this week it's issued about $70 billion worth of stimulus packages since the start of the outbreak. Kuwait announced a $16 billion stimulus package this week. We have seen reports, not confirmed, of Dubai seeking to raise debt, to refinance its debt and to support Emirates. Qatar Petroleum also talking about raising debt for its North Field expansion. On the social distancing measures, we've had curfews extended in many countries across the region. Saudi has locked down 24-hour curfews in many of its cities. The UAE, Algeria, Tunisia, Iraq have all got, Jordan as well, have all extended curfews. And we're seeing other legislative initiatives, special laws to permit wage cuts and unpaid leave by employers. Generally, these have to be done in agreement with employees, and Saudi has introduced funds to compensate Saudi workers who have suffered because of the virus. And you can see there are various, I've highlighted a number of issues there. The second bullet from the bottom, Iran drawing down on its $1 billion from its sovereign wealth fund. I think we can see all the markets across the region probably, as well as raising debt, tapping their sovereign reserves to provide stimulus and support the economies. And halfway down, there's a comment which I think is quite interesting. The Tunisian Parliament this week ceded some of its powers to the government for a 2-month period. And we've seen in other countries, Hungary most notably, that sort of introduction of emergency powers with parliament or government superseding parliamentary powers. And that's obviously to expedite measures, but raises concerns about the legal systems. Okay, next slide, please. So this is just a quick slide. It's too early to talk about what the recovery will look like, when it will happen, how quickly it will happen. We've got half of the world's population in lockdown. We're still seeing a lot of volatility in the equities market, in the oil market, and we're seeing huge stimulus and monetary easing policies around the world. So really, it's too early to say what will happen, but I think sentiment is shifting somewhat at the high level to what is the recovery going to look like and when can we start easing the restrictions. And so we have a sort of range of opinions. The optimists, and Donald Trump, I think yesterday, puts himself in this camp, are talking about a rapid V-shaped recovery. Once we get on top of the number of cases and the spread of the disease and the health systems are no longer vulnerable, we can start to unlock measures, and there's now so much money in the system, and we have low oil prices globally, which is good for consumers, that we'll see a rapid recovery in H2. Others, however, say that as we ease the restrictions, we'll see cases pick up again, and we'll end up bumping along the bottom of a U-shaped recovery whilst we kind of ease and then lock down again, and try and stay on top of preventing a second outbreak. So no clear appetite yet, but no clear sense of what will come next. But that's where we are at the moment. Now I'm going to hand over to Ed James, the Director of Content and Analysis at MEED Projects. Ed's prepared a couple of slides looking at the projects market in the Middle East and North Africa. And Ed will take questions, of course, using the Q&A button that you can see at the bottom of your screen. Over to you, Ed.
Thank you, Richard, and hello everyone. It's good to be back on here speaking about the projects market and hopefully answering your questions, any questions you might have about it. So I just thought it might be interesting to look at the projects market from a data perspective to see how things are performing, and just to put things into perspective and potentially to show how things are going, and that it may not be quite as bad as made out. So this slide here essentially shows what new projects have been announced and added to the MEED projects database in the first 3 months of the year, in the first quarter. And as you can see, we've got more than $50 billion of projects added in the last 3 months. Now, obviously, the full effects of the virus were not fully felt until, I guess, March. Nonetheless, this data does show that things are still happening in the projects market. New projects are still being announced. There is still project activity going on, and it's across different sectors here. You can see that Egypt is the most active market in terms of new projects. We know Egypt is booming, but we've also seen new projects, more than $10 billion worth of projects added in Saudi Arabia, UAE, and Iraq, and across all different sectors: gas, construction, power, and so forth. Now, the markets look quite small in comparison, but nonetheless, we've got well over $1 billion of new projects added in some of the other MENA states. So there are still projects being announced, there are still projects coming to the market, and that is fairly positive news and indicating that the work hasn't stopped entirely. The world still continues in some respect. We'll obviously have a better picture when Q2 is finished, and we'll be able to look back at the first half of the year. But nonetheless, it's still a positive sign that work is maintained. If we can go on to the next slide. And this again, I think, also demonstrates that. So what we've done is we've taken the value of contracts awarded in the first quarter of 2019 and compared them with the value of work awarded in the first quarter of 2020. And given the fact that we're in the middle of this pandemic, we would have maybe expected the Q1 2020 figures to be well down on the similar quarter last year, Q1 2019. And while, yes, we have seen a small fall off in project contract awards in Saudi Arabia and UAE, we've actually seen an increase in project activity levels in Qatar, Kuwait, and Oman. So on a like-for-like basis, and with the same caveat that the full effect of the pandemic has not yet, it was only really felt in March, we can see on a year-on-year basis the level of contracts is fairly similar, fairly stable. So we haven't as of yet seen a dramatic drop-off in new contract awards in the last month or so. In fact, just
Ed, if I could just ask you a quick question, Ed, whilst you're talking there. So is it your impression that things haven't changed much year on year so far, and that if we do have a rapid recovery, then we'll actually see minimal long-term damage to the project market? So is your sense that so far so good, but if the thing does drag on, that we might then see some impact?
Yeah, I mean, and if you last week or the week before, I presented our forecast, and based on a 3-month lockdown of economic activity, we only forecasted a fairly small downturn in contract awards, and actually still higher than last year based on the forecast. It's only really if you go into a 6-month lockdown that we'll start to see the market really being impacted. But just for example, just a couple of days ago, we saw China State being awarded a $500 million contract to build a hospital in Algeria. We've seen some other contracts awarded in Dubai real estate in the last couple of weeks. So tenders are still being issued, bids are still being submitted, and contracts are still being awarded. At the end of the day, some projects can't wait. The budget has been allocated, and we're talking about 3, 4, 5 years time for the project to come on stream. So the situation today is not so relevant. But anyway, I hope this data goes to show that life still continues, and work is still carrying on, and awards are still being made. So perhaps it gives a small sense of optimism that the market is not totally done for, and that there is some light at the end of the tunnel for what we're experiencing right now.
Okay, I have a couple of questions that have come in, Ed. So this is perhaps for you and for Callin. Do you think there might be any kind of a construction lockdown on as a result of the initiatives to stop the spread of the virus? Or have you heard anything about that, or do you think that might happen?
Well, I think Callin might be best placed. Callin might be best placed to answer that.
Yeah, I think the intention is to try and keep construction moving as best as possible. I think that becomes increasingly difficult as the virus spreads and starts affecting the labour force. So I think there is pressure there to limit the amount of interaction there is on sites. You're already seeing that. So there's policies now governing things like transport and the amount of people working on sites. And obviously there's curfew restrictions and things like that as well that are creeping in. So construction work's definitely being slowed down, and productivity's dropping. I think that the big challenge for the GCC is the fact that it's expatriate workforces. So if you do stop construction work, you've got a large number of people who are idle in camp accommodation and are just as likely to spread a virus if they're in camp as they are on site. So I think the feeling is to try and just keep sites moving the best they can and keep people productive. I don't think it's really going to solve the problem completely if you lock construction down the way you do, say, with more office-based people who can work from home. So I think they'll try to keep things moving. But that said, if infections spread and that there are a large number of cases within a certain labour force or on a certain site, I can see certain things being shut down. But it's in my opinion, this is the most difficult issue for the GCC to deal with the virus. I think that the rest of things, there seems to be quite a good and clear plan, but I think this is a very difficult situation where you've got a very large number of people living in close proximity to one another, and sending them home or sending them back to camp away from site doesn't really solve the problem.
Ed, a question for you that has come in your projects data. Is there a pattern about which sectors are seeing awards happening? You mentioned in your commentary there about oil and gas and real estate. Would you say that more is going ahead in oil and gas than in other sectors, or can you not?
No, not really. Actually, we're seeing contract awards and tender activity in general across all sectors. It's not possible to pinpoint any one particular sector that's accelerating or decelerating. So I think it might. Well, I mean, it's still very early to say. We need to look at the complete picture, maybe at the half-year mark. But we're not seeing any one sector or any other being more affected or less affected. So that's, again, a fairly encouraging sign. And just going, adding really to Callin's comments, we've seen Mohammed Al-Abar today from Email, Dubai's largest real estate client. He was adamant that, yes, there has been some slowdown per se of activity, but he's still intending to maintain activity levels on construction sites. So, and the construction has been one of those exempt sectors, which is considered an essential sector for work to continue. So the governments, I think, of the region are fairly clear that they want construction and project work to continue. So again, that's a good sign. But at the end of the day, if you haven't got any money, if there's a problem with the financial situation, there's nothing you can do. You've got to fund your project at the end of the day. If you can't fund it, then work can't continue, whatever your intentions. So we'll see more. We'll get more clarity on this in the following weeks and months.
The sense I get on this issue is that there's different branches of government have a different opinion on it. I think some elements within governments and in different countries will want everything locked down, and then others will take a different view and perhaps a more pragmatic view and say that, well, maybe it's better for construction to continue. And I think depending on how quickly infections spread and the individual number of cases on different sites, those different competing forces within the decision makers will have favour over one or the other.
Okay, there's a question. I know that Indrajit has a slide on this coming up, but there's a question about, are you observing renegotiation of recently awarded contracts, especially with supply chain disruptions? So I guess this can go in a number of directions. One could be clients pushing for lower pricing, and the other could be contractors calling force majeure, I suppose. Perhaps Ed, I'll go through Ed, then Callin, then Indrajit. Ed, have you heard anything about renegotiations or people trying to get out of contracts?
No, not beyond what's already been publicised. No, I think it's still fairly early days, and this is the kind of thing that may only become more apparent over time. A lot of contractors and clients can hold out for a few weeks and batten down the hatches while the situation develops. It's only when we have this kind of situation for 3, 4, 5 months that things really get very much affected. So I'm not aware at the moment, no, but perhaps my fellow panelists might have a better idea.
Okay, thank you. Now, Indrajit, I wonder if I know that you have a slide coming up looking at a story you have written this week about petroleum development of Oman seeking to push back on prices. Perhaps you could talk about that and what you've seen in terms of oil and gas clients pushing down on prices.
So thank you, Richard, and hello to everyone tuned in to this webinar today. PDO, as we've reported, is probably the third NOC in the Gulf region to have actually approached contractors for discounting of their, or renegotiating their contracts. Steep discounts have been actually asked from the contractors, up to about 30%. That's similar to what ADNOC approached its supply chain with. Obviously, I mean, the basic problem for contractors is, especially those who are in the very advanced stages of execution of their projects that are between the 80 to 95% of execution. Obviously, due to the localization clauses being put into contracts and the tight profit margins that are factored into bid prices, contractors, I've been told, usually work with a 5 to 10% margin on their bids. Now, I mean, they are faced with a situation where the client is now asking them for discounts between 20 to 30%, which is obviously not going down very well with the supply chain. But obviously, and that is having a cascading effect on the contracting community out here in the region as well. We've also done a story on Petrofac reaching out to their UAE employees with a voluntary redundancy program. Obviously, that's done with the larger interest of cost savings for 2020.
Okay, thank you, Colin. I wonder if you want to come in on any comments about contracts or prices being renegotiated.
Yeah, I mean, I think the thing I've noticed on the oil and gas side, just to echo what Indrajit's been saying, yeah, there has been cost pressure to try and get costs down. On construction on the sort of building work, I know of quite a few things that have been awarded in the last quarter where they've delayed mobilizing and they've effectively suspended work until the crisis passes. And then
these are in the UAE market or across the region?
UAE market. And then on top of that, there are cases of contracts more recently just being suspended that are at a more advanced stage. It becomes a little bit interesting, that issue. I think certainly the Dubai real estate market has had its issues for quite some time now, and there have been concerns about oversupply. And you can't help but think this is just part of the same trend that's been going on. But there's been quite a few things suspended over the past 2 weeks.
Okay, I'm going to bring this mini section on projects to a close. We'll come back to it towards the end of the webinar, but I think the summary from what I've heard is from Ed, we've not seen a noticeable change year on year on contract awards, but there is, in terms of contracts that are underway, there's been some slowdown, some delays, and possibly even some renegotiation of prices. So I think that's a summary of what we've heard so far. I'm going to move on now, Nabil, if we can go to the next slide. We're going to look at the oil markets. I think that's the next slide. Yeah. So obviously, from the Middle East point of view, the revenues from oil are fundamental to government spending and therefore to projects. And we've seen oil prices fall about 50% through March as a result of the collapse of the OPEC plus production agreement. But over the past week, there's been a bit of a pickup from about $22 a barrel up to about $32, $33 a barrel in the past week as a result of speculation about an agreement to cut prices. But there's a lot of politicking going on, so it's difficult to know. Now, Indrajit, you've written a story yesterday about Saudi setting up a virtual summit of G20 oil ministers for the 10th of April. Can you perhaps just give us a summary of where we are, what you think might happen with an oil production agreement?
Yeah, I mean, lots of political drama going on ever since President Donald Trump last weekend announcing he's spoken to Mohammed bin Salman of Saudi Arabia and Vladimir Putin of Russia. No, I mean, an agreement hardly looks feasible at this point, considering the political wrangling going on between these top 3 oil producers. However, obviously, Russia has now agreed to meet with OPEC producers on Thursday by virtual meeting, and a possibility of up to 10 million barrels a day of oil production cuts are being discussed. Whether that agreement will be actually reached in principle is a question that no one can answer at this point. However, yeah, I mean, considering the story we've done on MEED.com, Saudi Arabia has played a very smart and tactical diplomatic move to actually involve G20. G20, I mean, obviously, most of the countries are non-oil producers. They are basically consumer nations like China and India. So I mean, this is actually going to pay rich dividends for Saudi Arabia, because if you have a room full of, not a room, but then this is going to be a virtual meeting.
Virtual room.
Yes, a virtual room. If you have suppliers and consumers discussing, the oil market strategies in conjunction, obviously the possibility of reaching a reasonable deal increases manifold. Prices haven't done too badly. Obviously, it was a spike last Sunday when the markets opened. There was about a 30% jump. It's currently trading at about $32 a barrel. Aramco's share prices haven't done too badly either. It's at about 32 riyals, which is the base price with which the IPO was launched back in December.
So, I know that it's impossible to say anything for certain, but would you say that it is more than likely that there will be some kind of concerted or common announcement or common agreement on production caps, something to give a bit of support to the market? Or do you think we're just going to see a continuation of the price war?
So the price war, obviously, that's more or less been abandoned, if I may say so. Obviously, the major oil producers, Saudi and Russia, are mindful of the fact that 14 million barrels a day of demand has been wiped off the market. And that's going to continue through until May 31st. So obviously, they've got to price that in. So 10 million barrels a day of production cuts seems most likely. Obviously, nothing can be said until they've actually gathered for that session on Thursday.
Now that we're seeing China starting to pick up its activity, and Wuhan in particular is back to normal, at least officially. China is the biggest consumer of oil, crude oil. Has that impacted global demand? You know, we talked about this 15 to 20% fall in demand. Is that now? Where are we now with demand?
So yeah, I mean, that's right. I mean, industrial activity has picked up in China officially, as per government data. So the demand for May isn't going to be, it's projected to be not as bad as April.
Okay.
So from 14 million barrels a day, that's been projected for April, that's going to come down to between 11 and 12, which is still quite a significant amount of demand loss, but it's improving nonetheless.
Okay, thank you. I'll skip on to the next slide. Now, we did talk about PDO just a moment ago. Indrajit, we've also put next to your PDO story a story on Petrofac also resizing. Is there anything further you want to add to the comments you just made about the sort of the pressure for cost reductions on project clients and on EPC contractors as well?
Obviously, there are many other contractors I could add to that list, but since there hasn't been any official announcement, and we haven't been able to report that yet, but contractors doing business with the clients of the likes of Qatar Petroleum in Qatar and PDO and ADNOC are facing the brunt of capex reductions and cost discounts that have been asked of them. Job losses are imminent. Boardroom discussions are currently going on in several contractor management communities for enforcing similar measures to the one that we reported.
So you think we will see more of this kind of announcement, clients pushing down on contract prices and contractors, EPC and construction contractors, and other companies, I guess, pushing reducing their cost base?
Almost certainly, and it's basically the bench strength of these companies, of these contractors that are likely to be targeted. So you only would want to have manpower when you have active projects or a steady or healthy order book. If there are no projects coming through, or ones that, I mean, you're only dealing with ones that are under execution, you would want to cut down on that headcount. Okay.
I think, I guess, as Ed was saying, and as I said in the economic thing, a lot of it really depends on how this pans out. Thanks for that, Indrajit. If we can skip, Nabil, to the next slide, please. Now, Callin, this was something, I think it was Ed, somebody touched on EMAR a moment ago, but this is a story from MEED.com this week about EMAR suspending projects. Could you perhaps elaborate on, maybe not specifically on EMAR, but you're welcome to, but generally, what does this tell us?
Yeah, I mean, referring to EMAR specifically, it refers to a very difficult period for the company. I mean, as far as salaries are concerned, there was a circular went out internally saying that all levels of management would have their salaries reduced, including the chairman, whose salary would be reduced by 100%. And in it, they were talking about, well, that's just to safeguard the future of the company. So in other words, to protect cash. And we've seen similar moves last month by Emirates, for example, who were cutting salaries to protect cash and look after the long-term future of the company. So I think that's the salaries piece. I think on the projects piece, you get locked into a little bit of semantics quite often in these situations. Similar issues occurred in 2008 when a lot of projects slowed down. Lots of arguments fall out as to whether things are on hold or suspended or not. And I expect we'll see a very similar thing across all developers in the future as work slows down. Some people think it's on hold, some people say it isn't, and it becomes a dispute, which ultimately, as far as the contractor and the client are concerned, often gets resolved in some sort of legal process. So I think there'll be quite a lot of stress on projects going forward, not just with EMAR, but across real estate in general. And as I said earlier, I think this pressure's been building for quite some time, and I think it was addressed in August last year when the ruler of Dubai, Sheikh Mohammed, talked about there's problems with oversupply. I think those oversupply issues still remain, and then what's also been an issue has been an issue with underdemand, and the pandemic is affecting that demand in the short term and is also negatively impacting the long-term forecast for demand as well. So I think real estate is particularly challenged at the moment, and I expect that to continue to be the case. What that means for new projects going forward, I think there'll be a lot less things being awarded. I expect developers will start to look back at the sort of the playbook that got them through 2008, 2009, where you get a consolidating buyers within different, from a number of projects into maybe one or two projects, just to limit their project spend. So I can see quite a bit of change coming in real estate. But just to stress, I think a lot of these changes were coming anyway. I think the virus has just accelerated that change, albeit very dramatically.
Okay, if we move on to the next slide. So you've talked about real estate, and particularly you talked about UAE and the problems we faced in real estate already have been accelerated by the outbreak, and perhaps we might see consolidation of projects in real estate. If we move on to infrastructure now, Jenny Aguinaldo is on the line. She wrote a story this week about infrastructure. So let's move from real estate to infrastructure. Jenny, if you are there, we haven't heard from you yet today. Can you tell us?
Hi, Richard.
Tell us a little bit about this story, and then we can bring Ed and Callin in perhaps to comment on this as well.
Right. This story was based on a public document prepared by Synergy Consulting, which is a financial consultant advising some of the clients and developers of infrastructure projects across the region. So I think, like everyone else has been saying today, it's still very early days, but what we're trying to say here, I think, is that there will be an impact in terms of project execution across all types of projects, whether they're being procured as EPC or PPP. And this, for PPPs in particular, there's an added layer of complexity, which is the concession agreement. So the impact, I mean, we don't really know yet the extent of impact that the low oil prices and COVID-19 will have on projects. But what we're seeing is that there are various scenarios that the various players across the value chain should be preparing for, or will be preparing for, assuming that this crisis extends beyond what we all expect. So number one, for projects, PPP projects in particular that have not yet reached financial close, there's a threat of being able to reach financial closure according to the competitive terms with which the bidding was done, or was the bids were submitted. Let's say.
What is that? Is that because some of the assumptions in the commercial model have now been changed because smaller populations?
We don't know. It might change. We don't yet know if it will change, but they will have to prepare for it. And yes, definitely. So there's one trend here. Let's say in late March, you've seen IBRI 2 in Oman reaching financial close anyway. So you can argue both ways, that one, people will want to renegotiate tariffs, but on the other hand, we've seen one project at least that have reached financial close while this crisis is underway. The other impact that might happen is that for projects that are under execution. So EPC contractors, like in real estate, could see a delay in terms of project implementation, increased costs as well, and that will have an impact in terms of the timeline for the concession agreement as well. And number two, for project companies, which is usually comprised of the private sector company, and in some cases government-owned companies, then there's a threat of increased costs coming from construction, salary, and insurance as well, especially if some suppliers will invoke force majeure.
Okay.
For lenders, there's a potential as well that if the delay gets extended, then the revenue will be lower, which means the project company might breach the debt covenant, among others. For off-takers, then there's again increased costs and perhaps a tendency to look at tariffs and review tariffs. And finally, for shareholders, for some projects in the region, you've got partnership between, government-owned clients owning 30, 40, or 60% even of the project company. So they might need to spend the contingency budget as well as inject more equity to get the project started. However, given the level of low oil prices, then of course that might be an issue.
Okay, so it sounds to me like, and maybe Callin or Ed might want to make a comment, but it sounds to me like what you're saying is where it's privately financed infrastructure, so PPP models, we're now seeing some fundamental changes that could potentially disrupt the commercial packaging of these PPPs. Therefore, infrastructure that goes ahead with more confidence is probably going to be directly funded. I wonder if that's, so that maybe through the stimulus spending packages or something. Callin, what's your outlook for infrastructure?
Well, I think the important thing to say is things may change, and if things may change, then you're going to want to wait and see what that change looks like, if there is any change at all. So I think that's going to inevitably delay things. Even if nothing does change, you're going to wait and see if things do change. So I think there will be a delay from that.
Absolutely, yeah.
In terms of directly funded work, I think that's probably under more pressure in the short term. I think government, certainly when it comes to government spending and government projects, I think they're going to want to keep their spending down just because they'll need it for other things such as the healthcare.
Okay.
So I don't think we're going to see a splurge of government spending on projects.
Okay, so not looking good for real estate, certainly in the UAE, and we're not so optimistic about infrastructure, but there are so many known unknowns that we can't really say with certainty exactly what's going to happen. But Ed, I wonder if in your data, for your project data, if there's any indication that you've seen about infrastructure, transport infrastructure, or social infrastructure spending.
No, not really. I mean, as we going back to previous slides, we've seen that there's still tendering activity. Projects are still coming to the market. Will infrastructure projects get hit in the short term? Yes, of course. In this environment of uncertainty, there are going to be some delays. But when you look at infrastructure projects, especially those in the power and water sectors, they're driven by an inherent demand, and that demand for future power, future water isn't going to go away in the long run just because of the virus. So I'm fairly confident that a lot of these will proceed, especially if, like most power and water projects, they have government guarantees around the offtake and the demand. There's very little risk, virus or not virus, in the demand if the government guarantees take or pay. So I'm fairly confident about a lot of these projects, and in fact, I think this whole situation should result in a greater focus on PPP, because governments just don't have the cash to finance everything.
Yeah, there's certainly the balance sheets are under a lot more pressure.
We've been there before. We said that before in 2009, and it didn't materialize. Are we going to see that same thing again, where theoretically we should see more PPP, but we don't actually? Well, we'll have to wait and see, won't we?
Okay, thank you very much for that. Now we're going to move on to a special segment on Saudi Arabia. And if we could move to the next slide, please, Nabil. So this week, just today, in fact, MEED has published its latest research report. It's Saudi Arabia 2020. This report has, we've added a chapter. Callin has added a chapter on the coronavirus impact on Saudi Arabia up to and including yesterday. So it's hot off the press. I'd like, Callin, if we can just go through some of your main thoughts on Saudi Arabia. We've got two slides here. One is perhaps looking at the macro and fiscal position, and we could maybe touch on what does this mean for Vision 2030. And then the second slide looks at the project outlook for Saudi Arabia. So maybe everybody could come in on that second slide. Perhaps if you could just talk through the kind of overview of Saudi on this slide.
Yeah, I mean, the first point is that obviously Saudi Arabia is affected by coronavirus. There's quite a large number of cases in the kingdom now, so it's a live issue. Growth forecasts before were not too bad, but not great. What that's done is two things. The virus and, more importantly, the drop in oil prices and the increase in productions playing about quite a lot with the GDP numbers. So it's one of these great debates that we'll always have when it comes to oil producers as to whether you look at real GDP growth or nominal GDP. And what it'll end up looking like, because you treat the price of oil as constant with real GDP, the increase in production is going to mean that GDP increases more this year than what we expected. Which, yes, that number is correct because that's the way real GDP is measured. However, if you're looking at things on the ground, then you're going to find that there's less money around because the price of oil has dropped substantially. So I think on the face of it, GDP growth increases, or real GDP growth increases, but on the reality for most of the people that we talk to and people on the ground, you're going to find that growth is a lot more challenging than it was last year. What does that mean?
In the chapter that you wrote, the special chapter on coronavirus, you talked about a return to austerity. Perhaps you could comment on that.
Yeah, I mean that's going to be one of the problems here. You've got a lower oil price, which means reduced revenues. That means the government's going to be watching its spending. It's going to need to potentially borrow more. So it's going to be a return to a period of austerity. Now, of course, we experienced that in 2015, 2016, in particular, when there was a massive review of capital expenditure. There's also been a lingering effect of that, where Saudi Arabia is a lot more cautious with spending now than it has been in the past. And I expect that sort of caution to be reinvigorated a little bit. However, I think it's important to note that the Saudi economy today is very, very different to what it was in 2015. I think there's been a lot of the frivolous kind of spending behavior that used to go on in the kingdom has been capped. But there's also been changes to things like taxation's being introduced, so they've got better revenue streams than what they used to in the past. So I think it's a much tighter ship in terms of an economy than it used to be in 2015. So I don't expect the austerity measures to be quite as impactful as they were in 2015, 2016. That said, they're reviewing spending plans. They're looking to cut their budgets in certain areas and divert that spending, as I said earlier, to things like healthcare, which are obviously going to be put under immediate pressure. And what does that mean for sort of project spending? I think attention will be diverted away from that over the short to medium term. There were comments yesterday from officials in Saudi Arabia that they were expecting the lockdown and the health situation to be a problem for anywhere between 4 months up towards a year. So I think we're looking at most of this year having dealing with the coronavirus problem. You then need to start looking longer term. I think that this is a really, really, really important point when it comes to Saudi Arabia. You've still got a very large population. You've still got a government which, even though it looks like a very challenging year ahead, it's a government that still has substantial reserves. It can see its way through it. It can still easily have access to debt, and it will be able to get through that sort of period of time quite comfortably. I think it will then be a question of does it remain committed to what it's said it wants to do in the long term, and that really comes back to the Vision 2030 document. And I think undoubtedly the answer is yes, they will still want to deliver on the things that they've set out in Vision 2030. Possibly there's a point of view that I think will be considered, and I think this applies to the whole Gulf, that the Gulf is, or the GCC, certainly those that are the countries that are financially strong will say, look, we've got an extreme challenge coming up, but we do have the financial resource to get through this. We can bridge the gap, and we'll be able to start up fairly quickly once the crisis is over, which is unlike a lot of other economies where it really will be quite a long-term structural issue for them to deal with. So bizarrely, I can see an argument that there could be a comparative advantage for the GCC developing.
So actually, if I can just interrupt there, Colin. So I know that we're talking about Saudi at the moment, but your comments there about the relative performance of different countries across the Middle East and North Africa, we actually have had a question submitted on this. So I'm just going to put that to you now. So, so generally, how are the Middle East states comparing overall, and the GCC as a block within that? And where do you see the states that are best positioned to get through the crisis? Who's responded best, who's financially strongest? And from what you just said, I'm guessing that you think the GCC states are actually relatively...
Yeah, I mean, the countries with the largest reserves have got the most amount of money to get through the crisis. In terms of those that haven't, it's generally in the region, what we generally class as the oil importing countries that have the bigger challenges when it comes to their finances. So I think it's all to do with just the financial strength of the different countries and their ability to raise debt.
If you could just go on to
the GCC are the stronger countries. When I referred to sort of comparative advantage, I wasn't necessarily referring to comparative advantage within the region. I think it's comparative advantage globally. I think they'll feel that no, there's an opportunity here to. When things do come back, we can come back stronger than most people will be able to.
Okay, if we can skip to the second slide then on Saudi Arabia. So this is looking at the outlook for projects in Saudi. There's some data at the top of the slide, which is kind of the headline numbers, the size of the Saudi projects market, 1.4 trillion, of which 317 billion under execution, over $1 trillion in pre-execution. Perhaps you could break that down a little bit and look at what you think the impact on oil projects, and maybe Indrajit can come in on that one, and then non-oil projects. If we can start, perhaps, let's start, because you're focused more on construction, let's start with the non-oil projects, the tourism and things like that. What is the impact of COVID-19 on Saudi's non-oil projects?
I think that there's two categories of non-oil projects in Saudi Arabia at the moment. There's those which are large projects that are finishing up, and for example, Riyadh Metro, which is in the closing stages. I can see some short-term disruption with COVID-19 in terms of things we discussed earlier, things like productivity and maybe measures to segregate workforce and things, slowing things down a little bit, but I don't expect those projects to be stopped, maybe just a few sort of problems to mitigate over the short term. That's one category. I would put the other major category of projects in Saudi Arabia are the long-term schemes that really have been announced over the last 3 to 4 years. And I still think they very much remain on the agenda. I think that Saudi Arabia at the highest level is very keen to see those projects delivered.
So this is NEOM and the Red Sea
NEOM,
project.
Qiddiya, Red Sea project, Amala. how will they be impacted by what's going on at the moment? Well, unlike a lot of the conversation earlier, there's not that much work going on site at the moment. So there aren't large labour forces, there aren't all these challenges to deal with. They're still very much at the sort of design and planning stages, so quite a lot of that work can be done remotely. So I can see those projects not having the same operational issues that the more advanced projects have got. That said, like you were discussing with Jenny and I came in, I think there will be a question about what's the long-term impact of what's happened with coronavirus going to be on things like tourism. Are people still going to want to travel? Are people still going to want to stay in hotels? These sorts of questions are already cropping up in sort of how society and the globe has changed, really. And that could have an impact on the type of thing that Saudi Arabia wants to do in terms of, say, some of the tourism offerings. But I think ultimately the fundamentals will remain fairly strong. It might push things towards a slight redesign, but I think in the long term that those projects will still proceed as planned.
Okay, if I can push on to oil. Now, in your report, you talk about Aramco making statements suggesting it's going to cut capex this year. What are your thoughts on that? And maybe Indrajit can come in after you.
Yeah, I mean, I could maybe just give a couple of sentences on that. I think Aramco's got a commitment to increase and maintain production, so I think that's where their spending will be focused at the expense of some of the other capital expenditure they were planning. But I think Indrajit can probably come in here.
Indrajit, do you want to comment on Aramco's projects?
Yeah, I mean, I think we've been talking about Aramco's capital expenditure for 2020. Obviously, that's a revised plan for this year. But we've said that in the past two webinars as well. The long-term capital expenditure commitments remain in place. We can't overstate this. Obviously, there has been a revision of schedules to mega projects like Sulu. Obviously, the pre-qualification process has now been pushed back until third or fourth quarter of this year. But brownfield projects, I mean, those are very crucial to Aramco maintaining and even ramping up their spare capacity, potential. In fact, just this morning we reported 2 new offshore jobs being tendered to the LTA contractors. There's an interesting stat there on the slide about 40 billion on the value of Saudi contract awards in 2019. Obviously, more than half of that came from oil and gas. If I add the Marjan field development project, the Peri GOSP project, and the batch of 5 to 6 LTA tenders that came out last year, you add that, you get about $25 billion then and there. Plus, there were many more projects that were tendered last year. So I think all in all, I mean, obviously the contractors are going to feel the pinch of low oil prices this year. But I think moving into the latter half of the third quarter into the fourth, things are going to dramatically improve.
Okay, if I want to bring Ed in, but Jenny, we've had a few questions on renewables that I've left to the end because I know you have a slide. So I'm going to ask, and we're running out of time, so I'm going to ask Ed just to comment on Saudi projects, and then I'm going to come to you, Jenny, to talk about renewables. So Ed, if you could just, if you've got any thoughts to add to what Callin and Indrajit have said about the outlook for Saudi.
Thanks, Richard. I think everything's pretty much been covered. All I would say is that if we look historically speaking, if we look at the Saudi market, it is quite sensitive to drops in oil prices. So we saw Saudi Arabia fall away quite considerably between 2014 and 2016 and 17. Project awards halved in over that period, and it's only in the last 12 months really that we've seen a recovery. So just on an historical basis, if we're looking at project activity, then the fall in oil price is concerning for the kingdom. But we are in a different political environment now in the kingdom, with in a different oil market situation certainly. So let's see how it goes. But historically, it doesn't bode well for the market necessarily. But as I said, it's a different time, it's a different period. Let's see how it goes.
Okay, brilliant. Thank you. Now, Nabil, if we can go to the next slide. This is about Jenny, you did a story this week on MEED.com about a new renewables energy body, renewable energy body in Saudi Arabia. Perhaps you could tell us why that's important. Now, we're running a bit out of time, so if you keep it fairly short, but why is that important? And we've had several questions about renewables generally as a result of things. So could you perhaps bring those two thoughts together?
Right. So the Supreme Committee that was formed, which will be chaired by MBS himself, was formed on 31st of March. It was announced on the 31st of March, and people tell me that this committee serves to put all the government agencies in alignment towards delivering the renewable energy program in Saudi Arabia. So it's a positive move forward. And 2 days later, we've seen that REPDO basically announced the shortlisted bidders for round 2 projects of NREP, which includes 6 projects with a capacity of 1.47 gigawatts. So these moves basically seem to show that, number one, the momentum is being maintained. There's political will behind the energy diversification program and the renewable energy program. And number two, this is also important because if you've seen the low bids for the 6 projects, most of the bids, especially for the Jeddah PV solar PV IPP, is below 2 cents, or even lower than the bids submitted for the current world record holder, which is the 5th phase of Mohammed bin Rashid Solar Park. So overall, I think the message is that despite the crisis, we're maintaining the momentum for the renewable energy projects in Saudi Arabia. The new Supreme Committee, formation of a new committee, means they intend to maintain this momentum. And number 3, there's a possibility that some of these projects under round 2 could be could offer world record low tariffs. However, we should remember that the bids were received weeks before the first COVID-19 cases were detected in Saudi Arabia or in the region. So we don't know how eventually. I think that the real good news would be if they're able to award these contracts before or while much of the country is in lockdown, and consequently if we're able to see a financial closure of these 6 projects.
Okay, thank you. Now, whilst I have you speaking, Jenny, we've had a question that's come in about water projects in Saudi Arabia. So I know we didn't discuss this before the webinar, but what's the impact of COVID-19 on the water and, I guess, wastewater sector in Saudi?
Well, right now we don't know yet. I think it's too early to tell. What we've seen is that they've just awarded Jubail 3A, and we have not heard about any negotiations on pricing. So I think, but would that hold true for the next IWPs? I think, I mean, we don't really know.
Okay, so what you're saying, I think, is that it's still too early to say that there's any significant change. There's certainly not been any announcements or anything obvious.
Yeah, anything we say at this point in terms of whether there will be delays, whether there will be downscaling the projects, might prove wrong if this low oil prices and the COVID-19 crisis will not be as bad in the region as it is in other parts of the world, I think.
Okay, thank you, Jenny. Now, we've had a comment from, so many people will know Eddie O'Sullivan. Eddie was the former editor of MEED and is still a contributing writer, regular writer for MEED. You can read his comments, his excellent comments on MEED.com and in MEED Business Review magazine. So Eddie is responding to one of the pieces we talked about earlier about how the different countries are performing. So I'm just going to read out his comments because he's very knowledgeable on these things. So he says the countries that have got through the first phase of the crisis best are the ones with the strongest public health response in social distancing and shutdowns and disinfection. So he thinks, in his opinion, UAE, Qatar, Kuwait, and Bahrain are doing well, and in other markets around the region, where there are less robust public health systems, they're not doing so well. On Oman and Saudi Arabia, which are the two GCC countries that I didn't just list, they have well-developed public health networks, says Eddie, but there is a complicating factor, which is the spread of the population. And in Saudi Arabia's case, you have the pilgrimage question marks as well. But broadly, I think Eddie is agreeing or supporting the comments by Ed and by Callin that GCC states are better set up than a lot of other markets globally, as well as across the region, both in financial terms and public health terms. So now we've run out of time, really. I'm just scanning through to see if there are any quick questions. Indrajit, if you are still on the line, I can't see your screen there, but do you have any? There's a question about LNG demand. How do you see that evolving? Just in a couple of words, have you got any thoughts on LNG demand if you are there?
So obviously, with the low oil prices, the outlook for LNG sector obviously is quite subdued for at least until 2025. That's primarily the reason why Qatar Gas has decided to not proceed with the fifth train at this point.
Okay, thank you. Now, Nabil, if we can just move to the final couple of slides. Now, this is just telling you about a couple of reports. So the Saudi Arabia report that Callin was just talking about that is published today. If you want to find out more about it, you can see the link on the screen just in front of you. And on the right-hand side, this is a report we mentioned last week. So also coming out this week, it's a project, Middle East North Africa Projects 2020. This is based on data from MEED projects, and that's coming out this week. Ed James, who we've been hearing from throughout today, he has published a series of country-focused project reports, which also, if you go to those same email addresses, web addresses on the screen, you can find out more about the different country reports that MEED projects and Ed have been producing. If we can go to the final slide, please, Nabil. So if any of you want to find out anything more about anything we talked about today, if you wish to submit some questions or comments, if we haven't answered things that you want to know about, please feel free to email me or Ed at the two email addresses you can see on the screen in front of you. We shall be doing another webinar next week, and towards the end of next week, we're going to have a second special webinar that MEED is doing together with Mashreq Bank in the UAE, and Michael Gross, who is the partner for disputes at Clyde & Co, the law firm. And Michael's going to be talking about contract law in this period of COVID-19, and that includes things like force majeure and other options if you can't fulfill your contractual obligations. So 2 webinars next week. You can submit questions to those email addresses on your screen at the moment. And then one final point, I've had some questions about, can you get the slides? Yes, we will send you these slides. We have you've registered for this webinar. We will send you the slides. So thank you very much on behalf of the MEED team for joining us today. Hopefully that was useful. We look forward to your feedback, and we'll see you next week. Thank you very much.